Welcome to Devonshire Accountant's video on affordable housing with information on capital gains tax. We will be covering the normal rules of investing in an affordable housing property and capital gains tax implications in this video and how it affects investors. Before proceeding with this video, please note that the contents of this video are for general information only and do not intend to provide any tax, superannuation, legal, or accounting advice. You should consult your own tax, legal, accounting and financial advisor. Contents in this video are subject to change, and Devonshire Accountants do not take any responsibility for anyone relying on this information. So what's affordable housing? According to the Australian Taxation Office, affordable housing is where you provide residential accommodation below market rental prices. The residential accommodation is rented to people whose household income is not high enough to cover market rental prices in the area they live or work. Under the affordable housing scheme, property owners, property developers, organisations, and governments offer residential accommodation for rent below market rental prices. The affordable housing scheme is similar to investing in a normal investment property. Hence, you need to declare all the rental income from affordable housing in your tax return each year. Similarly, an investor can claim expenses on the affordable housing, which are offset against the income. A complete list of detailed expenses that can be claimed can be obtained from our office. Contact details are at the end of the video. However, the major expenses that can be claimed are as follows: interest on the loan on the property, council rates, water and land tax, repairs and maintenance of the property. However, any expenses that are capital improvements, then these have to be claimed as capital works. If you purchase any brand new items for the property, then these are claimed as depreciating assets under capital allowances. At Devonshire Accountants, our team will be happy to go through the expenses in details based on individual circumstances, and we can explain in details the capital works and capital allowances under affordable housing. It's very important to note that the following 2 points for affordable housing. The rules for affordable housing are generally the same as investing in residential rental properties. And there are different rules if you rent out your property through the National Rental Affordability Scheme, NRAS. We will not be discussing the NRAS on this video, and this information will be available soon on a separate video. Moving on to the main topic of capital gains tax on affordable housing. As you are all aware that when you sell an investment property, you need to calculate the capital gain or loss on the property. Under normal CGT rules, you can be eligible for a 50% discount on capital gains if you hold the property for over 1 year. Note that certain rules apply to be eligible. The same discount rule also applies to affordable housing, and the good news is that you get an extra 10% CGT discount. Yes, you heard me correctly. Subject certain requirements, which must be met, an investor will be eligible for an extra 10% CGT discount on top of the 50%. In a summary, what are the key requirements for the extra 10% discount? Subject to ATO's approval. To be eligible to claim the extra discount, you must meet all of the following conditions. You must be eligible for the 50% CGT discount on the property. Used your property to provide affordable housing for a minimum of 3 years, 1,095 days, since the 1st of January, 2018. Your property rental must be managed by a registered community housing provider, CHP. The capital gain was made by you as an individual, or distributed or attributed to you either by a trust or a managed investment trust, MIT, or indirectly from a trust through an interposed partnership, MIT, or other trust. You must have an affordable housing certificate from the CHP for each income year for which you are claiming the discount. This is a very important requirement that most investors fail to meet. You or any entities should not have received an incentive from the National Rental Affordability Scheme, NRAS, for the NRAS year. If an MIT has an ownership interest in the property, the tenant and their associates do not have an interest of more than 10% of the MIT. You're not eligible to claim the additional CGT discount for affordable housing if you invest through an entity that's not a trust, MIT, or partnership. For example, if you invest through a company. Other entities, for example local government authorities, such as a council, that own properties used for affordable housing and are managed through a registered CHP, aren't eligible to claim the additional discount. You also need to consider if you are foreign or temporary residents. As you can see that the requirements are not as easy, and our team at Devonshire Accountants are equipped to help you with meeting the requirements. We are happy to give you the detailed requirements to make sure that you qualify with affordable housing. We offer you a number of options to meet us, from online to face-to-face appointments at our Brisbane City office. Our office is fully electronic, and all our documents are completed as e-signatures. We serve clients all over Australia. I hope this video has been useful. Thank you for watching. We will appreciate if you could subscribe to our YouTube channel, as this will keep you updated on our video releases. Please feel free to contact us. Our details are on the screen. We look forward to hearing from you soon.